Welcome. In this video, when is ZBCN coin next rally? We will analyze this. Don't forget to subscribe, like, and please watch till the end to understand. In our previous analysis, we emphasized that for the current wave count we've been tracking under the Elliott wave theory to remain valid, the price needed to stay above a certain level. This level marked the starting point of the wave structure, and in technical analysis, such critical support levels are vital for the continuity of wave formations. However, over time, price movements clearly showed a break below this level, indicating that the previous Elliott wave structure is no longer valid. Although this technically invalidates the existing scenario, when we look at the bigger picture, this breakdown presents the possibility of a brand new structure and formation. Wave analysis in financial markets allows us to observe that prices move according to certain psychological and technical behavior patterns. But as we always point out, these waves are not static, they are dynamic. This means that as market conditions change, analyses must also be updated based on newly formed data. In this context, the invalidation of the previous wave count may actually signal the beginning of a new structure. We now have the potential to form a brand new Elliott structure, which is a technically positive opportunity. At this stage, we are observing the formation process of a new first and second wave. The healthy development of this process will help clarify the next movements. Specifically, if the new first wave forms with strong upward momentum, it will confirm that buyers are regaining control of the market. The second corrective wave that follows will show us at what levels the price is stabilizing and which areas may serve as support. At this point, the depth of the second wave is less important than its structural integrity and its role in laying the groundwork for the third wave. For investors, this scenario is quite promising. When the first and second waves form healthily, the third wave can potentially be much stronger. In technical analysis, the third wave in an Elliott structure is often the most powerful and most distinct in terms of price movement. Therefore, if we enter the third wave within a new structure, it's likely that the price will more easily break past previous resistance levels and experience significant gains. Additionally, the current price action moving within a horizontal range may indicate a consolidation phase in a market preparing for a strong move. These types of consolidation phases often signal the beginning of major waves. In other words, the current movements could be laying the foundation for a much larger and longer-term upward trend. When combined with technical indicators, volume profiles, and other supporting metrics, this newly forming structure is starting to produce very positive signals. At this point, what's especially important is determining whether the market structure is beginning to form a new upward trend. If a new first wave forms and the second wave is likely completed as a correction, this would indicate that the technical foundation for a strong third wave has been established. In this scenario, the price may break through previously unbreachable resistance levels more easily, offering positive opportunities for investors. In conclusion, the technical invalidation of the previous Elliott count has opened the door for a new structure and provided us with a fresh perspective. In such situations, instead of being discouraged, it is crucial to analyze the new formations and take advantage of the opportunities the market offers. The development of a new first and second wave suggests that we will receive much clearer signals in the near future. According to Elliott theory, if this new structure progresses successfully, the third wave is likely to lead to a much stronger and more consistent upward trend. This paints a technically positive picture for investors, but we can't rely solely on the Elliott wave for decisions. Let's take a look at other metrics as well. Stay tuned. When we closely examine the chart, it becomes clear that price movements are currently following a short-term downward trend. Especially when analyzing recent structures, each new high is forming lower than the previous one, and likewise, the low points are also occurring at progressively lower levels. This pattern is known in technical analysis as a lower high and lower low formation, and clearly indicates that a short-term downtrend is in progress. However, this bearish trend does not mean the market will continue in this direction forever. On the contrary, such periods often serve as the groundwork for major trend reversals and can present significant opportunities for investors. Lower highs and lower lows also reflect the current psychological state of the market. Buyers are entering positions at lower levels each time, while sellers are struggling to push prices upward. But formations like these do not persist indefinitely. At some point, the market gains enough strength to overcome this selling pressure and starts to show signs of a reversal. At this stage, the most important thing to watch for is whether a structural change in price behavior is taking place. The clearest signal of this change would be the price breaking above the previous lower high to form a higher high, followed by a correction that holds above the previous low to form a higher low. In technical analysis, this is called a higher high and higher low structure, signaling the beginning of an uptrend. The formation of such a pattern shows that the market is beginning to shift direction and buyers are becoming more dominant. Although we are currently in a short-term downtrend, we are waiting for key technical signals for a shift to an upward trend. Chief among these signals is the formation of a higher high and then a higher low, as mentioned above. If this structure forms, it could indicate not only a short-term reversal, but also the start of a new uptrend in the medium to long term. In this context, it's important for investors to be patient, closely monitor the new structures forming in the price action, and avoid making hasty decisions without confirmation signals. In technical analysis, impulsive decisions are often misleading. However, with patience and the right formations in place, a highly profitable period may begin. These kinds of downtrends can be psychologically challenging for many investors, but it's important to remember that the strongest uptrends often follow the deepest declines. The current downward movement is bringing prices to more attractive levels, which could be a significant accumulation opportunity for long-term investors. Looking at past chart patterns, similar structures have often been followed by strong and lasting trend reversals. Additionally, the current descending structure shows that the market is behaving in a technically sound manner. Although prices are falling, the movements are occurring within a logical framework. The market is not moving randomly, rather, it is forming lower highs and lows according to specific technical principles. This tells us that the market structure is moving in an analyzable and predictable way. In the coming period, if the price manages to break above the previous lower high, this would be considered a technical breakout signal. And if the following correction forms a higher low, then a solid foundation for an uptrend will have been established. Once this structure is complete, it may technically signal the start of a new bull run. In conclusion, while the price currently appears to be moving within a lower high and lower low formation, this structure may also indicate that the potential for an upward breakout is building. Therefore, it is crucial to carefully monitor price structure alongside technical indicators and identify possible trend reversals in a timely manner when making investment decisions. It must be remembered that downtrends do not last forever. Every decline eventually ends and turns into a new uptrend. What needs to be done now is to patiently wait for the technical signs of this reversal and act when the opportunity arises. Maintaining a positive outlook and seeing the bigger picture is especially valuable for investors during this period. That's why we cannot expect significant price increases without the formation of a higher low and a higher high. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.